Hi guys, I hope all of you are doing well. This is your Nifty Guy, and welcome to today's episode of Decoding Nifty with me. This is the series where we analyze and decode Nifty on multiple time frames so that we can trade the following day with much more confidence and clarity. In case if you guys like the way I present the videos or price action concept or we plan the trade, please, it's a humble request, like the video, subscribe to the channel, share it with your trading friends and community, as well as put down anything that you might have to say in the comments box, be it feedback, be it appreciation, be it criticism. I am open to everything, right? So on that note, let's start with today's video in which first we'll analyze what we had planned for today versus what happened in the market, what trades did we take, what trades could have been taken in case how we took some trades, how did we manage those, and then we'll plan the day for tomorrow. All right. But before that, there was a comment from Mr. S. Singh, maybe. The username says that S. Singh TP. I like your presentation. It is mostly intraday that you are presenting. Is it possible to use the same concepts on higher time frame and arrive at a reasonable level to play positionally like for a week, basically trading the nifty, taking the nifty positions home for the next day, right? So my reply to this, I also posted a comment over there, but I wanted to clarify a few things because everything cannot be written down and explained in words. And I thought because I will be recording this video today, so let me just cover those points. So see, the price action points or the concepts like breakout with a pullback, uh, or maybe the reversals using some double bottom pattern along with some RSI divergences, everything works the same on any time frame. The only difference is for a daily time frame or on a hourly or a 4 hourly time frame, you might have to wait a little longer for confirmation for your entries. Plus, the SLs might also be a little bigger sometimes, which might not suit everybody. But obviously, see, with positional trades, your rewards are also equally big, right? So if in case if you have a risk appetite like that, or if you can sit on those trades, like uh, why I have chosen scalping or option buying is because it suits my personality, my style of trading much more in a much better way. I have tried everything. So my suggestion would be in case if you are looking at applying these concepts on a higher time frame and looking at trading Nifty or whatever instruments, please trade either in futures or using option selling. If options is your preferred derivative, use option selling because that way you will be able to hold on to the trade for longer. In case if your bias is on the right side of the market and your trade is on the right side of the market, you will also gain a lot of the uh, points using the theta decay, right? So that is something. Plus, I personally am someone who would not want to hold on to my trades for long. That is the reason I look at option buying, and that is the reason I only look at intraday trade setups wherein I enter and exit on the same day. I might hold some trades for some time, depending on the price action or whether there is momentum in the market. But mostly, I will exit my trades towards the end of the day until and unless I have a very big cushion on my side in the current trade, and even if the next day the opening is against me, and obviously there has to be something very hopeful on the price action front for me to hold the positions on a uh, overnight, right? So price action concepts, yes, they will work on all the instruments, they will work on all time frames, just that your entry criteria would be different. You might be needing to wait, say, for a daily time frame. In case you need to wait for a pullback, you have to wait for an entire day, then wait for the subsequent day for the candle to close above the pull or go above the pullback. It might take. So entry would be delayed, and of course, things are much more different on a higher time frame. There's less noise, obviously, that's the good part of it. But will you be able to hold the trades for in case when the pullback is coming, or in case if the trade is going against you, how long will you hold on for your trade for, right? So these are the things and factors that you need to consider when you are trading uh, positionally, right? On any stock or any index, if you're trading positional, these are the things you might want to look at. Plus, as I said, the SL might be on the bigger side in case if you are trading using on a higher time frame. I personally would always prefer a smaller SL. So sometimes what even happens is in case if I am seeing a feasible or viable entry as per my setup, but the SL on a 5 minutes time frame is bigger. So 5 minutes time frame is my most preferred time frame. This is the time frame on which I make take most of my trades. But in case if I see that on the 5 minutes time frame, the SL is coming out to be a little bigger, what I do is I switch down to a 3 minute or a 1 minute time frame in order to find a smaller SL. And that is how I take my trades, and that is exactly why I am explaining these things. Nothing is superficial or sugar coated around here on this channel. I explain exactly what I do, and that is the reason I uh, put out only intraday analysis. Of course, I look at multi-time frame. I look at a top-down approach. I start with analysis on the higher time frame, confirm the trends, and then it is something where I plan the entries, right? So that's it for the comment of Mr. Singh over there. I hope my feedback would help you or maybe plan your trades. Every trader is built different, every trader has different psyche, and there's nothing right or wrong in trading, right? Do whatever suits you, try out everything, try with smaller lots and smaller quantities. Don't risk much at the beginning and see what is working out for you, right? Option selling works out in a very good way for many people, but it did not suit me, right? Someday, maybe if I would want to increase my quantity much more in a much more bigger way, I might again go back to option selling. But right now, yes, I'm in a good and comfortable space doing option buying on Nifty alone. So now we'll start with today's analysis. So yesterday, what we had planned was after a very volatile day, we can see some sideways action in Nifty, and we were looking at a long only above this particular high and a short below this high. Nifty did not trigger anything. I personally did not take any trades today because Nifty was mostly sideways. If you would into scalping, this was a good trade which was around here with a good double bottom again at the support levels itself, but then that is something which might have worked, might not have worked because the market was sideways. This was not a trade because I look at important locations where I take the trade. So this is something which was not as per my setup, so I did not. But apart from this, I don't think there were any further trade setups that could have been traded during the entire day today, right? It was a no trading day for me. From tomorrow onwards, I will not be trading for around till around 11th of June. I am traveling to Japan with my family. I will try to put down these videos daily at the end of the day. I might have to skip it on some days because of the travel. So uh, I'm sorry in advance for that. But I will definitely try my best to put down those videos daily. For tomorrow, we'll keep the plan again very, very simple. We'll wait for Nifty to break down below this low. These levels will remain unchanged for us because Nifty has not formed any new low. So on a daily time frame, if you look, today was a good inside bar candle which has formed around the low. Now, try to understand this is a kind of a head and shoulder pattern on a very small head and shoulder insignificant pattern, which might be triggered in case if we break around the neckline here and we might see some lower levels, right? So that is something which you might want to put into consideration in your trading. You can just simply draw a zone around here because it's not exactly a very good head and shoulder, but okay, this might work, might not work, not highly convincing, but see right now on a daily time frame, if we look at the where Nifty is, we are still safely within the 0.5 to 0.618 zone, and any reversal from here can again continue the upward momentum, right? And in case if market has again decided to change its structure, so around here the market formed a higher high, a lower, but this low was breached and a lower low was formed, and then again the high was not crossed. So if this is the higher high for market to change the structure, this low needs to be taken out. Again, that is something that we will look at when it happens. For now, we'll take one day at a time, and for tomorrow, the plan of action will again be very, very simple. We can again simply connect these two highs, right? And above this trend line, okay, we can plan for a long trade. In when we are planning the long trade, depends on the opening. Say, for example, market opens flat, breaks down below this. Good, you'll get a good trade early on in the day. If the market opens flat, breaks down below this, gives a pullback, you can take a trade. See, the room on the downside is a very good room. Around 24,400 is the place, or maybe this swing low is where market will immediately, or the first reaction low, which where market will take some support, will come down. So on the downside, there is a good room. So the best opening would be a flattish or a small gap down. Okay, a small gap down opening would be very good, wherein market spends some time over here, breaks this, gives us a pullback, and then at the break of this low, we can take a good trade on the downside. For upside, we can uh, look at a trade above this, but then again, uh, we will need to look at booking our profits around these levels or being cautious around these levels. Okay, prices can react around here with some selling, and then above this level, we are obviously very bullish. We can plan a long trade above this level as well in case if market opens with a big gap up. So today the cash data is there wherein DI and FIIs both have been net buyers in cash market in good amount of volumes. So in case if we see some positivity in the market or over the week over the US markets period, US market trading, we might see if in case if we see a good up down gap up. Uh, and market crosses above this, we can again take a long position with a pullback. In case if market opens a little bit gap up above this trend line, we'll wait for it to cross this particular uh, swing high and post this, which will take a trade on a break of the pullback. So this will be the simple plan for tomorrow. Tomorrow is again the monthly expiry of Nifty options, and it would be a sincere suggestion to you guys, whoever is trading in Nifty options. You can look at trading in the next week options instead of tomorrow's options if you are into option buying, and especially after 2 o'clock, please keep an eye on the open interest to see large amount of open interest on either side of the market on call or put. On monthly expiries, it is usually seen that good one-sided moves come on either one side of the either be it a short covering or a long unwinding, depends on which side has got a higher open interest. And if market is moving in that in opposite favor or opposite direction of those people in taking those trades, and if it is triggering their stop losses, and in case if that does happen, you get a good move. And that is the only trade, see, on expiry days, which uh, if there is a setup which is forming around those levels, I look at trading in the current week's expiry of current week's option, and so that I can get a cheaper option. And that is kind of a hero zero trade, but that is something which is very, very rare. But then, yes, obviously, that is something which I have observed happening a lot of time, especially on expiry days. So keep an eye on log into Sensible using your Zerodha account or maybe whatever platform you use, and keep an eye not only on the open interest but also the change in OI in the last 5 minutes. So say for example, there's a huge call writing at around 24,800 levels. Say for example, 24,800 or 850 levels has seen a good amount of call writing, and market is inching towards it or consolidating around here. And if those call writers are not exiting and the market starts moving in this about 24,800. This is just an example for you guys to understand what I look at. And then you see the change in OI, which is in the last 5 minutes. Say, for example, 20 lakh people have closed their contracts, 25 lakh people have closed their contracts. The open interest is usually in some CRs around uh, the end of the day. And if you see those people running away, so that is something which adds fuel to the fire of that move, because all those people who would have sold options around, and when they are seeing the price rising again, they would be in a hurry to exit their positions. And what they need to exit their position are buy orders, and buy orders will simply pump in the demand in the option prices, and that usually gives a good one-sided move. Obviously, this example which I have given is for the trade on the when the market is moving on the upside, call writers get trapped, and when the market is moving on the downside, gives a momentous move on the downside, the put writers would be trapped. So either a short covering or a long unwinding, whatever it is, that would be coming in. So please keep an eye on that. Do not necessarily need to trade it from tomorrow. Uh, have a look out for it. Observe it for a couple of expiries. Only if you understand it, try to take those trades further on in the time period, a couple of weeks or a couple of months down the time. But this is something which I keep an eye on. So none of the days I look at the open interest, because open interest can change in the blink of an eye, and that is the only reason I only look at open interest on the days of option expiry. And in case if I am getting a good move, or I'm expecting a good move in either of the direction, I see that thing in the data. Uh, on one side, I will look at trading in that week's option only for that particular trade. Otherwise, throughout the day, I will be looking at trades only on in the next week's expiry. So yeah, that's it from my side for today. I will see you guys tomorrow post the market. So that's it from me. This is your Nifty Guy signing off. Cheers. Have a good day.